It's a great pleasure now to bring on board Mr. Hardayal Prasad. He represents SBI Cards. That is one business where I'm sure the curiosity levels are very high because everybody wants to know that in the Unlock 1.0, how much of the normalization has happened to India's biggest credit card company. Mr. Prasad, thank you for joining us. Really appreciate that you managed to take time from your busy schedule. I'll start with very basic questions. If let's say your activity before the lockdown was X, how much of your activity has come back to a function of what your normal activity was, let's say in the month of Jan and Feb?
Okay, thank you, Kunj. It's always a pleasure coming on ET. First of all, let me tell you that the customer interest in taking a card is extremely strong. And we have experienced immediately after the lockdown was eased in May. And the customer queries and the instant decision making that we do, the volumes have actually last month have witnessed almost about 70 to 80% of the business that we were doing pre-COVID. I think that's a very, very strong rebound of the customer queries for a very clear product, which is strong in nature and people prefer it. So the card issuance, if you really look at it, on a run rate is still down. But however, we feel that as the Unlock 1 starts, as you just mentioned, and the malls and the footfalls improve at various places, we should see a very, very strong rebound and maybe a pre-COVID level in the next 2 months.
When you say 70 to 80% of your activity is back, are you referring to number of transaction or the total value of the transaction?
There are a couple of things. First of all, I did mention on the number of customers who are showing interest to acquire the card. That's very, very important for the top of the funnel. That remains, that needs to be. So the play of demand is going to unfold in the coming months. Now, if you look at the spends, we have reached almost about 70% of the spends of the pre-COVID level. There have been days when it has been even higher than that. We have run some programs. We are running programs with Amazon. We ran programs with some other companies as well. We are working with industry majors in terms of the offers that can come in. We are also looking at major changes in the way the business is being done. Now, if you really look at it, card is a very, very strong product. It's a product which provides huge amount of digital interfaces. It provides convenience, and all that it provides, customers are actually lapping onto it. On top of it, the low demand of the credit card or the low intensity penetration of the credit card in India helps one tremendously because it provides you so much convenience. You have a product is built in with a 50-day moratorium. I think all that, if you look at it, people are looking at it differently now. The digital payments are moving towards the card, and going forward, we will see that the customer behavior will change. One of the most striking things that we are looking at it is, and we are making a really deep dive into what the way. There are people who are more than 50 years old. They were not very strong in terms of the usage of the credit card. But these are the people who have come back to us. I should say the cash to digital movement and upload of digital wallets has seen a tremendous increase. And people are making payments now by converting the credit card into the e-wallets and then making payments. Important thing is the utility bills, if you look at it, the insurance that you look at it, they've all moved to the digital. Everything is moving to the credit card. I think those are some of the things which are very, very striking. Amongst the top city also, if you look at it, Hyderabad is contributing the most significant today. The impact of COVID in Hyderabad is strong. Despite that, Hyderabad is one city amongst the top 8, which is providing one of the best spends that you look at it. So I think when I look at it, we look at it from holistic purposes, that whether the business is back 60%, 70% on the acquisition side and on the spend side. I think there is a little pent-up demand that is coming up. As we go forward, this pent-up will be replaced by many other things as the unlock starts, and we should see a pre-COVID situation very, very quickly.
Now, I distinctly remember that you had mentioned in a last interaction with my colleagues that you are not bothered about a large drop in your in the profile of your customers because they are salaried customers. But what about the non-salaried customers? I mean, they still account for about 15-18% of your total book, so to speak.
Absolutely. We are not saying that there is not going to be stress in the portfolio. The spends are going to be slightly the 30% lower spend that one looks at it. There are a couple of factors to it. One of the most important things is that India is not fully unlocked. So there are a lot of places which are still closed today. And there are these sectors which have been affected by the COVID. You look at aviation, you look at hospitality, you look at SME, the self-employed. Obviously, many of them have been hit. And these are the people who have not been able to spend. Because of the moratorium that many people have asked for, and the hardship tools that have to be enforced because of various reasons, you find that there are people who do not have limits also today. Many of them are coming back. There are almost about 35% of the people who have come back and repaid to us. We have released those limits. I think these are some of the things that are playing out today. And as we move forward, we will see that the credit culture in India is going to come back. It is very, very strong. It is not a GFC time in India. This is a time where the credit culture has built over the period and people are very, very conscious. You look at Gen Y and Gen Z, these people have 30, 40 years of work life. And if they default today, in the present environment, in the strength of the credit bureau, it may be impossible for them to borrow in future. And that is what is happening. People realize it, they come back and they pay. If there is a genuine difficulty, people say that, okay, I've lost a job, or there is a temporary cash flow problem, either restructure it, convert it into an EMI, or I'll come back and repay. I think those are some of the things that I feel so happy about the credit culture of the youth in India, that going forward, we will see a much brighter and a better India as it becomes, much more financially independent. It becomes very, very rich in terms of what it is happening with the economy. It's just a matter of few years that India will become very prosperous and the spends and everything will start improving.
It's a great point. My next question perhaps is a direct one. While all of us admire the fact that even though SBI Cards comes from a PSU stable, it's a company which has been run, managed by professionals like yours, and the business and the ratios are comparable to some of the best credit card companies in India and globally. But in this time of crisis, what would you prioritize? Your fiducial social responsibility of giving some ease out on moratorium on repayment, or you would say, look, I also need to protect my shareholders, I will follow the law of the land and I will not be liberal when it comes to collections and moratoriums?
I think very, very good question, and especially because it comes from a stable of public sector and the kind of responsibility that sit on us and the market making that we feel that we should be taking a stride forward to do it. I think SBI Card wants all its users and the potential users in these unprecedented times that you are talking about, that we want that in this time where there is a tectonic shift towards the new normal, we want to continuously support their businesses. We want to support them, and we will do whatever is possible to ensure that it is the convenience that makes a difference. People remain very, very committed towards using this card. It is frictionless. The services are absolutely, absolutely amazing that we can provide for it. We definitely want to do that. So, in terms of the support that we would like to provide, we remain fully committed towards that. In terms of what I would do to ensure that people are not over leveraged, yes, we will do. We take a lot of steps. I would not like Indian youth to be over leveraged. So if it requires a little raising of limits, income levels, if it requires a tightening on the scorecard, we will go ahead and see to it that people do not unnecessarily over leverage themselves and feel that they do not have capacity to repay. If somebody has a capacity to repay, if the income estimation models, the debt estimation models, if they work together, I think there is a massive opportunity, keeping in view the low penetration, that there is a large swath of population which has been actually deprived of a credit card, and not just a credit card product, the benefit, the convenience that credit card provides. I think a credit card is nothing but a card which is actually a digital card. It is one thing which can actually do a huge amount of changes into the way the spending takes place. I think that's what we would like to do, coming from a public sector stable as well as a market making player.
You mentioned about people paying utility bills through credit card, and I must share with you that I'm one of those who started using uh, a credit card to pay utility bills purely because of convenience, and I'm sure there are a lot of other people who are doing that. But I've also started using a lot of other digital apps, UPI based apps. So what earlier was a credit card transaction has now morphed to become a UPI transaction. And the category millennials and the Gen Z which you refer to, they are the guys who've got not one finger but both the fingers always on the mobile phone. And they would say, look, I want to use UPI apps because they're convenient.
I am fully in agreement with you. One is that I am not a competing product. They are payment products, but it is not a competing product. It's very different in the way you do it. However, if you look at these small value transactions, the utility, we have seen huge changes. And when I mentioned to you utility, I mean, utility is seeing an increase of almost about 60, 70%. That is huge. And another thing that is happening, and when you mentioned about UPI, people are transferring money from the credit card to the e-wallet, and I mentioned it in the initial part of your interview. They are transferring money from the card to the e-wallet and then making a payment. If I look at it right now on the right-hand side, I have my, the dashboard that comes from our data lake. This is the second biggest category today. People are transferring money to the e-wallet. So despite the fact that I am not on UPI, as the Reserve Bank of India is having a relook at everything in terms of how they are going to allow other players to use UPI, people are still using it. So I think there is immense scope of cash being converted into digital, and cash will be converted to UPI, credit card, PPI, e-wallets, and these are the instruments that are going to be. I think this is a moment, and I mentioned to you, it's a tectonic shift in the new normal, and people are going to use digital far more aggressively than they did it after the demonetization also.
When I looked at the moratorium number which the SBI chairman Mr. Kumar shared with us on Friday, I was frankly delightfully surprised. I'm looking at the numbers what you are sharing with me in terms of people who opted for moratorium. That number is not a very bad number. It does not run into 30s or 40s, which all of us thought. What does that tell you? That why so many people are taking such a less moratorium option when we all know that the cash flow in the economy is bad. I mean, the news in the economy, cash flow, job losses, unemployment does not tie up with the moratorium number what you are sharing. I mean this in a good way.
I think I was also here and I heard you when you were asking these questions to the chairman also. And I was extremely delighted when I saw that number of 23%. And out of which he also went on further to mention that 82% of that has paid two installments also. I think it just goes on to strengthen our cause on two, three things. In the last 10 years, the infrastructure, the IT infrastructure that has been built, the credit bureaus that are coming up, maturity of the credit bureau, the information that comes on the application, the information that is captured from the surrogates on the behavior score and all other score, they are today so strong that the evaluation that is done of a customer when you give a limit and when you manage the portfolio, They are all very, very powerful tools that are there with any credit card company. And a credit card company is a digital company. It's a data analytics company. It's very different than any other bank who would not do so much aggressively on the risk management and the data analytics. Now, all these things have helped us in ensuring that the kind of clientele that was inside was strong enough and would definitely ask for a moratorium if the cash flow is going wrong, if somebody is losing job, but it is still very well managed. In fact, we have closed the May lower than April. I think there was a spike in April, but we have seen a major decline. And as we talk today, it's 9th today, and we have in 8 days also, I have seen a further decline in the percentage of people who are using the moratorium. I think what we are doing is that we are continuously engaging with the customers. We want to remain engaged so that I actually tell him that what are the implications of the delayed repayment. We are not saying that you cannot do it. Yes, you have an option of taking a moratorium, but please remember that there are repercussions of taking a moratorium also, because there is interest element that will always remain. And I think there are a large number of people who are coming back and saying that, okay, I want to either repay it, restructure or rephase it, or I would like to pay the minimum amount due and move forward as a out of moratorium. I think all these things are only pointing towards the way people are behaving in India.
So two more very quick follow-up questions. Sanjeev Bajaj of Bajaj Finance along with Uday Kotak of Kotak Mahindra Bank, they both have said the following, that we are not going to grow our balance sheet, we want to protect our balance sheet. At SBI Cards, would you consider this crisis as an opportunity to add more customers, gain more market share and take your brand forward, or you want to conserve, wait and watch, and growth and aggression will only come back in next financial year?
As a credit card company, we are much more faster and nimble-footed. We have far superior risk and data analytics capabilities than any other company would have it. Firstly. Secondly, that we have always done the same thing that they are talking today. We have never ever said that we will grow aggressively. We have been very measured. If you look at our loan book also, as a comparison of our total spends that we do in a year, they are slightly lower than our peers. So we have been very, very measured in terms of the way we grow. We have also grown on the top line, but that again, there has been a very, very clear indication of the risk and rewards. If you look at our financials, you would always find that it is not that we came out and we gave solid numbers just prior to the IPO or even subsequently to the IPO. It's been a journey. For 5-6 years, if you look at our ROE and ROA, we have always been strong enough in terms of the way we have conducted our business. We will continue to look at it. We'll continue to monitor it. This on a credit card portfolio, it's a continuous exercise to look at the portfolio and say whether you want to actually increase the limit, you want to reduce the limit, because every time, and I just want to tell you, every time you will swipe my card, I will profile you. I will not only profile you, I will also profile the machine from which the card has come. If it has come from an online player, I will profile it. If it is coming from an application, which you mentioned some time back, that there are people who are making payments from like Zomato, those kind of, I will profile those things. And I will also profile the machine, POS machine. So I think it's such an intensive exercise. And that is why the investment that we have made in 2 years, especially the setting up of a massive data lake, and it allows us to instantly make changes. I don't even have to wait for 48 hours to actually change the risk levers. The risk levers are there, and a lot of it has been automated by RPAs, machine learning. So it will give you a trigger. Now, if you do not do it completely, it could be an absolutely reckless effort that anybody would do it. I don't think that a risk department would be so reckless that they would not take the cues that are coming from the data in terms of immediately taking action. I think today we are in a very, very good spot, and we will continue to work towards it to ensure that the portfolio is solid, portfolio grows also, because when what they say, I don't want to comment on them. We are banking on the cash being converted into digital. That is a bigger opportunity. Just 3% of the population holding a credit card. We want to be the market maker. Just very 3% of the GDP being contributed by the credit card as a spend. We want to improve that. We already have helped significantly from 2018 to 2019. It went up by 1%, 2 to 3. There's a 50% growth. So I think those are some of the things. So I feel that anybody who's in the digital space, who's actually providing the digital means of payment, they are the ones who will continue to grow. It is not the traditional businesses that will grow. I think people are now looking at it, that how the convenience and rewards can work digitally. And that is card, convenience and rewards digitally. I think CARD, if you look at it, I think it is huge for us that we being a digital company, we will see major tectonic shift, I would say, towards a new normal in terms of the way we will do business now.
The SBI Card's IPO was toast of the town. The stock has not seen its IPO price. You are one PSU manager which is running a business which markets are still valuing it as at a premium of consumer companies. So one side is the responsibility which markets have given you. Second side is the concern which some shareholders would have that, why did SBI IPO? Why is SBI IPO still trading below its market price? Would you blame it on COVID crisis, bad market conditions?
I think this is the pricing or the trading value on the bourses today has nothing to do with the intrinsic value of the company. This is a phenomena never ever seen. I'm sure in your lifetime, nor in my lifetime, we have seen anything which could be anything closer to COVID also. So it was very difficult for us to say that, I can be completely barricaded from the market forces. Very difficult. It will be very naive for us to say. But please actually look at it, that what is the percentage of decline that the trading took place at? Was I at 50% lower than my value? Or I am just at 30% or 20%, was traded at about 620, 630. So basically, we are just at about 20% lower than the value that we came out. I think that's the strength of the company market believes in and says that it's a different story completely. And I will never ever compare it with a consumer kind of a story. Our lines are different, our income streams are different, our performance is different. We are in a completely different space. So there is no comparison with a consumer company. So I think one must look at it from that perspective, that has the company put everything properly? Is the risk controls in place? Is the spends being moved in the proper direction? Is the top of the funnel continuously being fed? In fact, last month we did about 80,000 cards. Everybody put together would have also done 80,000 cards. We are trending much more. We probably will do huge numbers this month also. It is a strength of State Bank of India franchisee that the banca channel is contributing, and all this big number that we have generated is spending now. Yesterday we were reviewing on some of the spends, and we realized that cities between 201 to 990 are also contributing 25% of the spend. I mean, you can imagine the kind of penetration that has taken place. I think it is huge, and I do recognize the fact that we just came out when the first COVID cases started arriving in India or happening or being talked about. Maybe if we would come in January, you would have seen some absolutely amazing performance, and then the COVID would have taken over for everyone. I think it's just a matter of time and we will rebound back strongly.
Really appreciate your time. Thank you for joining us. You've been very candid, you've been very frank, and if I have to summarize the interaction purely for our viewers, I mean, that's what happens in a market. When the sentiment is bad, good franchises, they get punished, but if franchises are great, if there's a moat around them, if there are good managers running them, they also tend to bounce back. So I don't think, unlike a lot of market men who'd written off FY21 for SBI cards, I think that really is not the story looking at our today's conversation. Stay safe, Mr. Prasad. Appreciate your time and so good to connect with you. It's my first time I have personally interacted with you. So thank you very much once again.
Hi, Mr. Kumar, can you hear me?